Hoffman, swearing the witnesses, please.
Chairman, just for the purpose of the YouTube, I administer a note to Assessor Thibodeau and her deputy assessor before we came back online. So they have been sworn in. You're good to go.
Go ahead, Lafourche Parish Assessors Office.
Oh, good morning, Commissioners. Brian Eddington on behalf of the Lafourche Parish Assessor's Office.
Jaden Randall.
Jeffrey Cohen.
It's their appeal.
Okay, this one should be interesting. Do I need to push the button or? Okay. Okay, all right, perfect. Just to quickly summarize the issue and then we'll kind of get into everything. What we're dealing with here is we have generators that are idle due to EPA regulations that have been sitting idle for multiple years, and we're asking for an adjustment on the idle generators. That's mainly what we're dealing with here. So we'll just get into the exhibits, and I assume that everyone has our exhibits. Okay. So exhibit 1 is our initial Lat 5 return that we filed that shows our opinion value of 9.1 million. After speaking with Ryan, and me and Ryan did a really good job of communicating back and forth with each other, talked with him, and obviously he had a much higher value than where we were at. So we determined the issue with our difference of values that we needed to use the Louisiana Tax Commission guidelines as far as life schedules go. So we made an adjustment and followed the Louisiana Tax Commission guidelines, and it brought our value up to 14.9 million with the obsolescence adjustment on the idle generators. And that was agreed upon 8-year life for the offshore generator fleet. The parish was still at 21.5 million, offering no obsolescence on the idle equipment. Exhibit 3 is Ryan had then asked after we made the adjustment for backing of these EPA regulations. So we provided a letter from the Global Indirect Tax Manager at NOV showing the letter from Cummins stating the EPA regulations. And so just to sum up the letter and what it says, the EPA came out and said that tier 2 and tier 3 engines in the generators cannot be used due to their emission regulations. So we needed to use tier 4 engines in the generators. The NOV fleet is designed to fit tier 2 and tier 3 engines. So in order to get the tier 4 engines into these generators, it's going to take a lot of time, a lot of money. And I guess the main difference between the tier 2 and tier 3 versus the tier 4 is the tier 4 engines require DEF fluid, tier 2 and tier 3 don't. So the customer base actually wants the tier 2 and tier 3 engines versus tier 4. They don't have to deal with the DEF fluid. Another key point there is once these generators hit 20,000 hour, the 20,000 hour threshold, that's when they undergo major service. And all these generators that are idle in the yard have hit that threshold. So once a generator comes in, it's at 20,000 hours instead of doing your major rebuild. Now, due to the EPA requirements, we're required to completely change out everything in a generator and upgrade it to tier 4 to meet the new emission regulations. See exhibit 4, and sorry, I'm trying to do this quick as I can, but make sure y'all get all the information. Exhibit 4 shows correspondence between myself and Bruce House, the regional manager over Ledger 130 throughout the United States for affordable power of NOV. And he's describing why, because a question that Ryan had is, why are these assets still on the books? Why not scrap them? So here's correspondence between him explaining why we still have the generators on the books. And they're keeping them on the books because selling them or completely scrapping them out will completely reduce their fleet altogether. They would have to, those generators going to have to completely buy new tier 4s to replace them. So that would essentially put them out of business to remove these assets from their books. And after that email, Bruce House provided me with a breakdown per the size of the generator package, what it would cost to bring these generators up to rentable status. So we have a breakdown for the cost of the engine, the alternator, radiator, exhaust, the housing and skid changes that you'd have to do. And that averaged out to be 70%, 76% of the asset's actual value. So we have to put in 76% of what the equipment is actually worth to get them to rentable condition. So that's how we developed our 25% adjustment down. They're worth basically 25% of what their value is what we're asking for based on this information. After that, Ryan requested that we provide a list showing the idle generators and which ones they are. So in the Excel spreadsheet that you have, hopefully you're looking at it, there's some yellow and green. It's a colored one. Every line item that's in yellow is a generator that's idle and sitting in the yard. I think it's very key to look at where it says ledger 130 last invoice date. There's actually two separate columns. Most of these generators, if not all of these generators, have not been invoiced on since before 2020. So they have been sitting idle at this point, talking about 2023 tax year for 3+ years. All of these generators have been sitting in the yard for that long. The generators that are in green are generators that are still being used at that time that had not yet hit the 20,000 hour threshold. Once they hit it, they'd become idle. So that's just the breakdown showing those idle generators. Then after that, there's another spreadsheet where I just included all the information I got from Bruce Howes as far as the engine costs, radiator costs, all the costs it would take. And this is where we actually came up with the average obsolescence as far as what it would cost to make these assets back to rentable condition. So this is where our adjustment stems from. After provided this with Ryan, we had, like I said, we had lengthy discussions the entire time, but there's another list showing, I guess, the total number of idle generators. So the total number of generators sitting out in the yard is 140. Of that 140, NOV was actually able to bring back up 14 of these units to rentable condition. And I didn't touch on it in the last spreadsheet, but just to give you an idea of the cost that we're talking about, if they were to upgrade all 140 of these generators up to Tier 4 emission standards, you're looking at 17.1 million in costs that they would have to put in to bring all their fleet back up to meet the standards. After that, Ryan requested that we show some financial information regarding this location and Ledger 130. So as of September 26, 2023, I asked the Global Indirect Tax Manager for NOV if she could provide this information. At the point when she emailed me back, she said that she thought, or the financials for that location are tracked on a consolidated basis only. So she did not know if they had the information readily available, broken out by location. A month later, she emailed me back and had the breakdown. She was able to generate a report per location for the revenue information. So we provided that to Ryan, and Jeff is going to discuss the revenue portion.
Thank you, Jaden. So for NOV exhibit and IVS exhibit 7, there's 2 pages. The first page is a letter from or an email from Jaden to Ryan discussing the information that's on the following page, which is the historical financial data. There's a couple things to note here on the historical financial data. One is that these EPA regulations went in as of December 31st, 2017. So that is going to be kind of a turning point where you see data on the total revenue side that it has gone down dramatically from them. The reason that, however, 2018 and 2019 are kind of steady before that decline is that NOV was able to put orders in for Tier 2 and Tier 3 engines to Cummins, which is their sole provider of these engines, prior to that date of 12/31/2017. At that point, they were able to receive the engines that they had put on order. So there was a lag into when those engines would then come offline. The next point noticing here is that there's kind of a steady revenue between 2020, 2021, and then 2022 goes up a little bit. There's a reason for this. Basically, the way this business unit creates revenue is putting these engines out for rent. When there's a natural disaster, when there's severe weather, these can then be utilized more. Because of weather incidents in the Gulf Coast in 2022, they were able to actually rent these units a little bit more, the rentable side, again, not the idle side. However, it's still only about half of what it was prior to the EPA requirements being put into place. So 2022 is actually going to be the overall cap of what this business can do. Since then, we're going to see more generators go offline. So those revenues going into the future are going to drop. Since then, we're going to see potential revenue and profit percentages go down again as those units go offline. One thing to point out here again is that this is backwards leaning, showing you the revenue from the prior 10 years. The most that this is going to hit is now in the future as more and more of these generators go offline. When they hit that 20,000 hour threshold, we're not going to be able to utilize those at all. So it will never go above what it was in 2022 as a total business unit, $26 million, whereas 10 years ago, that number was 3 times that. From that, I was going to go back to Jaden so he can discuss an explanation of why, or of the conversations he had with Ryan after preparing this information.
So once we provided the revenue information to the parish office, Ryan and Wendy were able to look at the data, and the response in Exhibit 8 is that since there's an increase in gross revenue from 2021 to 2022, NOV would not qualify for an economic obsolescence reduction. That's what came from Ryan. And as far as the adjustment goes, we're not asking for an economic obsolescence adjustment. We're asking for an external obsolescence adjustment. This is external issue due to the EPA regulations placed on this equipment. And we're not asking it for all of the generators. We're asking for the adjustment on the idle generators only. Once they get brought back up in the future, they would move off that idle, go back to full value or however they're valuing them. But while these generators are sitting idle, we're asking for an idle adjustment on them. And that's the external obsolescence adjustment that we're seeking. So in Exhibit 9, we just have the Louisiana Tax Commission guidelines. And we'd just like to point out in Exhibit 9, Section D6, in determining the value, you determine the amount of other forms of depreciation when present. And D6A points out functional obsolescence as defined in Section 301. D6B points out economic external obsolescence as defined in Section 301. Then these are the tables, obviously that are used by Louisiana Tax Commission that we're following their guidelines. If you get through a little bit further down, I guess it'd be GB-18 at the bottom of the page. The data sources for the tables are Marshall and Swift. So in the next section, we have Section 301, and just would like to point out the definition of external economic obsolescence is generally considered to be economically infeasible to cure for personal property. This is exactly the situation that we're talking about. Further on in Louisiana Tax Commission guidelines, obsolescence Part 3 can be caused from legislative enactments, EPA regulations. Obsolescence Part 4, change in consumer demand for products that result in inadequacy or over adequacy. Same situation. Our customer base wants Tier 2, Tier 3 engines. We can't due to the EPA requirements. We have to upgrade to Tier 4 engines. Therefore, the generators are sitting idle. In the Marshall and Swift publications, shows that electric power equipment actually has a salvage value of 10%. We're only asking for the 25%. So we're giving there, but per the Marshall and Swift salvage value is 10%. We acknowledge the fact that in the future, they could possibly bring these back up to par and they would lose their idle status. But in order to do that, if you look at the pictures, kind of discuss the photos here, and in the pictures, you can see these are photos from the yard of all the idle generators sitting out there that have been sitting out there for multiple years. You can kind of flip through the pictures of just showing all the idle assets that we're referring to, and these are the assets that we're asking for an adjustment on. In the very last photo, there's a picture of a generator that actually was tier 2, tier 3, was idle. You can keep scrolling down. Sorry, there's 140 of them out there. That was it right there. And sorry, it's kind of, I may have to rotate it. Okay, no, that's no problem. Go up. Right there. So this is what once was an idle generator that we were able to bring up to tier 4. And put in the new engine, new exhaust, new radiator, everything. That's a generator that we were able to take from the idle status and make rentable again, obviously with a lot of money to get that done. But that's what they look like. As you can tell, the only thing left over from the other generator is the skid unit. That's it. Everything else has been replaced to upgrade to the tier 4, which is what is required per the EPA. Exhibit 12 and I think it's 11 as well.
Mr. Chairman, I just have one question
Yes,
for
sir.
the taxpayer. When you talk about the generators and the uses, the EPA doesn't require you to upgrade those unless they've exceeded the 20,000 hour usage. Am I correct in saying that?
No, sir. I believe for these generators, the 20,000 hour is NOV's threshold when they do major service on the equipment. So all the generators that were sitting in the yard when the EPA regulations came out had already hit that threshold. So they were there already to be rebuilt in the tier 2, tier 3. But since the regulation came out, they now have to do, instead of it being their typical repairs, maintenance that they do on the generators, they now have to upgrade everything to tier 4. So now the fleet that is currently out there, and if you look at the generators that are highlighted in green, the Excel, those generators hadn't met the 20,000 hour threshold yet. So as soon as they come in for that major service, instead of doing your typical maybe 1 week, 2 week long service, make sure everything's good, send it back out for rent, you have to completely redo everything up to tier 4.
Until they meet that 20,000 hour threshold.
The
Am I correct in
20,000,
saying that?
yes, sir.
Okay. Thank you, Mr.
And
Chairman.
everything that was highlighted in yellow, all those idle generators have hit that threshold. Exhibit 11 and 12 is just a copy of the appeal to the board review. And then the last exhibit, exhibit 13 and 14, we just provided comparative analysis of the obsolescence versus not using obsolescence on this equipment. The RCNLD assessed value be 346, 214 as far as the property taxes, the liability would be, and then what we're asking for on the equipment would bring that down to 233, 505. So just to confirm, I guess, what we're asking for, the parish is at 21.5 million on all this equipment. We're asking for 14.9 million is our number. And that's with just an adjustment on the idle equipment.
We'll hear from the parish.
Yeah, I got a couple of questions for Mr. Randall. Mr. Randall, I'm gonna apologize. I literally was retained on this case last Thursday, so I'm gonna need you to walk me through some of what you discussed.
Yeah.
One thing you said it very, very quickly. I want you to elaborate on.
Yes, sir.
You commented that if you remove these idle generators from inventory, it would put National Oil Varco out of business.
Yes, sir.
Can you explain that?
Yes, let me go back to the email and kind of, that was just a summarization of what was said. What exhibit is that? And this
Just
is-
explaining your own words, what you meant. I'm literally, it just caught my attention.
Yes, sir. No, I mean, the generators that are there that are tier 2, tier 3, if they were to just completely, because the EPA requirements, they still have some tier 2, tier 3 engines out there that have not met that 20,000 hour threshold that were on rent at this point as of 2023. If they were to completely get rid of their entire fleet and scrap them, they would have to completely upgrade their fleet to tier 4 and buy brand new generators. What they're able to do currently with the generators that are idle is they can still use the dumb iron of the skids, upgrade them. Obviously, if you put a new motor in it, you're gonna have to change the mounting brackets for where the motor's gonna mount and all that kind of stuff. But you can use the dumb metal, the dumb iron for the skid and the housing and be able to reuse that to upgrade your fleet, I guess at a much lower cost than having to just go buy all new tier 4 generators.
Okay, and you also stated that it would be economically infeasible to cure these deficiencies, did you
Yes.
not?
Yes, well, that was for the Louisiana Tax Commission. For their
Right, no,
guidance.
no, but that's exactly what the regulations say. So
Yes, sir.
are you saying, is it economically infeasible to cure these deficiencies?
It would be 17.1 million to
Okay.
cure all of the deficiencies.
Yes, sir. If you look at the asset
I'm
information.
not questioning you.
Oh,
I'll get to you in a second.
okay. No, I was just
I
going to
understand.
assess. Okay.
No, no,
I
'cause
appreciate
he's the one who made the testimony. I'm
Okay.
just asking you,
Yes, sir.
are you testifying that it would be economically infeasible to cure these deficiencies?
Yes.
It would be. Okay. First of now, I'm looking at the witness list and identifies you as the manager for industrial valuation services.
Yes.
Who is industrial valuation services?
Industrial Valuation Services is the representative for NOV.
So you're a
That's
tax
it.
rep.
Yes, sir.
Okay. And I gather you don't have anybody from NOV here to testify
No, sir.
to this. Okay. And so you also testified that it would cost $17.1 million to bring the fleet up to spec. So that's the entire fleet.
That is the fleet that is idle,
Okay, the idle fleet.
the idle fleet.
And that $17.1 million cost to cure is the basis of your request for a 75% obsolescence reduction on the idle generators, correct?
Yes, the actual reduction is based on the amount from Bruce House, on what it would cost to cure, yes.
Okay, and that was an attachment to Exhibit 1, I believe,
I think it was a little further down.
and it may have been.
I think it might have been 4 or 5.
You're correct, I believe it was the second page of Exhibit 4.
I think it's that one right there, yes, sir.
Okay, and this is spreadsheet, correct?
Yes, sir.
And was any supporting documentation submitted to the assessor showing that these are in fact the minimum cost to make rentable?
I mean, other than this coming from Bruce House, who is the regional manager of portable power,
Right? And where did
Right.
he get that information?
I would assume he knows. I mean-
I'm asking you to assume, I'm asking, if you don't know, you don't know, that's okay.
I can tell you that he knows what it costs to replace these engines.
And how do you know that?
I mean, that's his job. That's his job to know that.
Okay, so you can't explain to me what would cost $30,584 to minimum cost to make rentable a 15 kilowatt offshore skid package?
Yes, I can explain to you because the engine's gonna cost 12,000, the alternator's gonna cost 2,300, radiator's gonna cost 1,526. Back in 2023, now with inflation, I mean, I'm sure that number has increased.
And again, where did those numbers come from? Is it-
From
it-
Bruce
it's
House.
Just in a spreadsheet. So there was no supporting documentation showing how this spreadsheet was calculated, provided to the assessor, was there?
To the assessor?
Yeah.
No. From
No.
Bruce House, this is what was provided,
No, I'm understanding. I'm asking what was provided to the assessor
this spreadsheet,
and nothing else.
from Bruce House and a forwarded email.
But again, no supporting documentation.
To back up this, no, sir.
I want to turn to Exhibit 1, your original filing. And turn back. It's actually the first attachment after the actual lat form. It's a
Yes, sir.
personal property rendition spreadsheet.
Yes, sir.
One thing caught my eye.
Mhm.
The fifth column is for trend. You see
Mhm.
that? Where did you get those trend numbers?
These were our initial valuation based on Marshall and Swift.
Okay.
And then after we submitted this, I talked with Ryan and changed everything to Louisiana Tax Commission, which is the indices used in table 2501C.
Okay.
would be,
No, it did ultimately correct, because that was one of my questions, again, trying
yes,
to
sir.
play catch up
Yeah,
on this.
we ended up making an adjustment and, to meet Ryan and make sure we're meeting the tax commission guidelines. So the adjustment was made. That was just our initial, return.
Okay, and then to make sure I understand, and I think I do now, but what you're asking for is obsolescence only on
Idle generators.
idle generators. And that is based solely upon the spreadsheet for the cost to cure and nothing else.
I mean, it's really, really from a common sense standpoint, it's based on the fact that you can't be used due to the EPA requirements. They haven't been rented out since 2020. The majority of them have not been rented out since 2020. So, I mean, you can look at it how you want to look at it, but
And,
from a very small basic standpoint, they cannot be used.
okay,
So that's why we're asking for the adjustment.
okay, what documentation do you have showing that these idle assets have not been leased out since 2020?
Spreadsheet showing, this is actually from Portable Power Ledger 130. This is a report that they run out of their system that shows the last invoice date for this
And who's
equipment.
Portable Power?
Ledger 130. This is National Oil Barco, Ledger 130. It's Portable Power. That's the division we're dealing with.
Okay,
at
oh,
this
it's the same entity, just
Portable Power is a name, Ledger 130 is a number.
got it, okay. I think that's all the questions I have.
The commissioner, I have a commissioner. I just want to make sure I understand. So the taxpayer is saying you can't use the generators. You're not making any money on them, therefore they should be valued less.
Yes, sir.
But you also testified that during a natural disaster, you make more money on the, no, you did, that you make more money on the generators that are working. Is that correct? You
The-
said that. I
the
just want to
gener-
confirm what you said.
The generators that go out,
The generators that go
that
out.
can be
Stop,
rented
stop,
out.
Stop, just answer my question.
Yes, sir.
Ask your question. So I'm gonna ask the question, Cessa. Did you raise the tax value on the generators that when their revenue goes up? Okay.
Okay.
Questions from the commission?
Mr. Chair, I have a couple of questions. The EPA, is the EPA requiring that you keep these assets on your books? Did I understand that element of the email?
Thank you, sir.
The EPA is requiring if any portion of the generator, including the dumb iron, the skid underneath, is to be reused and repurposed, that they stay on the books, yes.
So you can't disaggregate the cost.
Correct.
And the 20,000 hours, is that an EPA or is that an NOV quality control issue?
That is NOV. NOV requires that 20,000. That's when they do their major service on their generators.
I have a question, Mr. Chair, for the assessors. Do you all have record of the years that those, generators were used in excess to what the amount was normally that you guys would tax that went up, like Mr. Chairman said, Mr. Michelle? Do y'all have any numbers on that when the tax did not change, it stayed the same, even when they made more money? Do y'all have any data
We
on
don't-
that, on the years?
We don't dive that deep into it. We require them just to report what had Sidus and Lafouche on January 1st, and we stay consistent with table 2503 period D, and we use the composite multiplier there. We don't take into consideration and punish the taxpayer if they're making more money. We value it based on chapter 25.
So the taxpayer, so is it correct that you guys did make more money in those times when there was a natural disaster or something that you guys' taxes did not go up? Is that correct in what we're hearing today?
Mr. Chairman or Mr. Board Member, Commissioner, I do not have the valuation for the prior years in front of me, so I cannot say for sure whether or not we paid more tax in prior years.
We paid less tax in prior years.
Thank you, Mr. Chairman.
Additional questions from the,
Yes, sir, I have.
And I do want to. Okay,
We don't look at how much taxes was paid every year because it's based on what had Sidus and Lafouche. So if the original acquisition cost is less for one year compared to the next, that's what drives the ship as far as what the assessed value would be. So it's all predicated on what was reported. We never look at the gross revenue. It's always what had cited each and every year.
Thank you, sir.
Mr. Romick, you had another question?
Yes, sir. Just out of curiosity, well, I'm going to go back. I thought there was some element of an 8-year life that,
We're going to get into that.
that,
Good question.
thank you, that was part of your basis for obsolescence. So we'll keep that in the back pocket. As Mr. Eddington said, he's going to eventually get to that. Are there any other like businesses in your parish that this business operation is conducting?
Up through 2023, anybody who had rental equipment that went into the Gulf of Mexico, we always consistently used an 8-year useful life. We could have gone higher, but we felt because of the harmful conditions of the Gulf of Mexico, an 8-year life was more suitable. So for that reason, we were consistent, especially businesses that are located in Port Fourchon. Any rental equipment had an 8-year useful life.
But would the tables in chapter 25 typically call for a 10-year life?
For generators, it's on page GB7 for the 2023 version of chapter 25. We could have done a 10-year useful life and followed the tax commission's guidelines.
So what you're representing is that there is consistency in this industry. If I'm operating a generator rental business, I'm getting the same useful life as every other.
Yes, sir. The application is the same across the board.
And do you attest that you did receive the minimum cost to make rentable table?
I received everything that's in NOV's exhibit. I did receive most of it electronically. We did take everything into consideration and review it. So
Did you have any discussions with the taxpayer on that?
we did have thorough discussions, and one point that was brought up, and since you're kind of going that direction, when you compare what we could have used with a 10-year useful life per the tax commission's guidelines, anything that was rental equipment, idle or not, I want to emphasize that, idle or not, the composite multiplier was 55% for an 8-year useful life versus 74. So they got a 19% reduction for all the rental equipment for 2018. That's significant. Anything that had acquisition year 2019, we used 66 versus 82%. So that's 16% they got idle or not for 2019, and it was 19% for 18. So it was from an assessed value standpoint, it was 971,000 less than what it could have been.
And with the taxpayer's recalculation from a 9.7 to a 14.9, did you validate those calculations?
I never agreed with any of his valuation methods because I didn't find it was in line with chapter 25. I felt the valuation we did follow the tax commission's guidelines because the taxpayer is supposed to put acquisition costs, original acquisition costs, how they use the tables to get at fair market value, and then go from there. I never got what I felt was something satisfactory to align with the numbers I got.
So your assessment of 21.5 million is driven, taking into account obsolescence by the 8-year life.
Yes.
Thank you. No further questions.
Okay, we've heard from the taxpayer. We'll hear from the
I
assessor.
have a question real quick. No, you're fine. Hey, did I hear y'all correctly? Can these generators be, if it's a natural disaster, state of emergency, can these generators be rented out?
The idle ones cannot.
It's
The
cannot.
idle generators
Okay.
cannot be rented out.
All right, but y'all also, I'm just making sure that I understand this. Y'all say it's economically infeasible to scrap, but it's also
cure.
economically infeasible to cure.
Yes, sir.
That's very contradicting. And you also, if I'm correct, you when you were talking about the EPA, you said that you have to keep it on the books if it is to be used. So that's the decisions the company is making to keep them because they're looking, I guess, at one day redoing these machines.
I mean, in the documentation I provided, they are trying to bring these machines back up to rent so they have more in the rental fleet. As far as 2013 or 2023, when I think they did 13 generators they're able to bring up, and that on average per year they can bring up 10 to 15 generators per year out of the 140. So if they keep on their pace here, and I guess 10 to 15 years, they should have their entire fleet back upgraded to tier 4.
And as well, are y'all in agreement on the age life that they gave y'all, a better age life of 8 years instead of what they should have at 10?
Yes, me and Ryan had these discussions about the 8-year life schedule, and like he pointed out, all the rental equipment in Lafourche Parish is on an 8-year life. So we're not disagreeing on the 8-year life schedule. We're disagreeing with the fact that we're not getting any obsolescence on the
What-
idle equipment. If all the generators out there are on an 8-year life schedule, that's fair. But
Would
what
it-
about
would-
the obsolescence?
Would it be better if they put all the active ones on 10, then
Uh,
gave y'all 8, then we could, at this point, say that they're giving you obsolescence? Because you are saying that they gave you obsolescence. We're all in agreement that you should be on a 10-year life. They gave you 8 years of life on them, even the active ones that you're making the money on. So it seems to
They're
me
doing
you
that
can't
throughout
say, seems to me you can't say that they're not giving y'all no obsolescence.
They're doing that throughout the parish. It's not like this is a special case just for
Mm-hmm.
us. They're using 8-year life on all offshore. rental
Well,
equipment.
I understand, but
So-
they're helping everybody.
But it's not a special case in our scenario. Our special case is that the EPA cracked down on our Cummins engine generators and made them idle.
I understand, but it's also y'all's company is deciding to keep them. Y'all can take them off the books if they want to. It's not a if or if they won't. The company might decide not to. But you just said that by the EPA, if they decide to, they have to keep them off books if they're going to redo them. If not, and they're obviously the EPA didn't say that you had to. It's if the company's looking to repurpose, which is what you said. So that's a decision the company's making, is going to keep them and redo them. And so that's all I'm getting at, because it's very contradictory to say it makes no economic sense to scrap them. That's a company choice. And it makes no economic sense to fix them. They can't go together.
It makes no economic sense to fix them all at once. That's why they average 10 to 15 units they can bring back up a year. That's where it's economically infeasible to do it all at once, to bring the whole fleet back at one time.
No questions.
Hear from from the Lafourche Parish Assessors Office.
Okay, my first one I'd like to call, Mr. Ryan Friedlander, who's already given testimony about half what he's going to do. And Mr. Friedlander, instead of the normal question answer format, I'm just going to kind of wind you up and let you go. Could you explain to the commission, the documentation you received, the conversations you had with, well, I guess not with Orwell Varco, but with the tax representatives, and how you went about valuing this property, and specifically whether your office considers utilization of an 8-year life as obsolescence. As a matter of fact, since that's where Commissioner Frazier left it, maybe if you could start with that about, do you consider the utilization of an 8-year life, even though it's for all likely situated companies, do you consider that obsolescence? I mean, is that why you're granting it?
So I want to specify that if you had generators that were shore-based, not going over the GOM, they would have a 10-year useful life. So there is some disconnect going on. 8-year useful life is specific for companies that have rental equipment going offshore, experiencing the harsh conditions of the GOM. So if you have other companies that it's a roadside generator, it's not going over the GOM, you can look at our books. We have a 10-year useful life. We did 8 because of the conditions, the working conditions. But I would have felt very comfortable sticking to a 10-year useful life because that's what the tax commission's guidelines stipulate. It doesn't say anything else, whether if it's supposed to be onshore or offshore. It specifically says gas and diesel generators, 10-year useful life. So I do feel by using an 8-year useful life, they receive a higher break than they otherwise would have from a depreciation factor. For 18, it went from 74 to 55% to calculate their fair market value. So their fair market value was 19% less than it otherwise would have been with a 10-year useful life. For 2019, their fair market value was calculated with a 66% composite multiplier versus 82%. So it was a 16% difference. So they received almost a $972,000 reduction in fair market value. I think that needs to be very much clearly stated. We take everything into consideration. Every email that Jaden sent from NOV, I read multiple times. Jaden and I had great conversations about this. I looked at all the spreadsheets, but when it was all said and done, we felt the 8-year useful life very much reflected the fair market value of the equipment, idle or not. And I'd like to point out that the 8-year useful life was used for active and idle equipment.
Mr. Friedlander, I want to kind of hone in. You said that utilization of that year life saved them almost 972,000. So can you give me what the, again, not assessed value, but the the assessed value would be utilizing an 8 and a 10-year life?
So the fair market value, just for those 2 years, we went from 25.6 million, which would have been a 10-year useful life, to 19.1 million. And when you look at what the property taxes would have been, it would have been over $105,000 more had we used a 10-year useful life. So we felt, taking everything into consideration, looking at the economic data. So the revenue is just to determine whether or not the company qualifies for economic obsolescence, nothing less than that. When we're talking about other types of obsolescence, it has nothing to do with revenue data. But we felt using an 8-year useful life, they were receiving some additional depreciation as opposed to using a 10-year useful life. So we felt, based on the tables and the rationale we use, that the equipment was fairly valued.
And again, several questions were asked about, did you increase the company's assessment in years when, particularly natural disaster years, when revenues were greatly up, and you commented they didn't. Could you explain what you use financial statements for, and if you ever use them to increase it in value? I mean, there's been a lot of talk about obsolescence. There's a flip side, munificence. Can you explain what munificence is and whether your office ever applies it?
So what we look at when a company provides financials, it's with the hope that their revenue qualifies for an economic obsolescence reduction. So for 2023, we compared the gross revenue for 21 and 22, and there was an increase. We don't penalize a company ever for that. We like to see companies successful in Lafourche and in Louisiana. So we don't penalize a company. Their assessed values don't go up based on revenue. The only time an assessed value would go up is either if they reported more equipment, or if the equipment reported was the same, but due to inflation, maybe the factor is a little bit higher. You'll see that in the tables, that sometimes the factor is above 1. So when we look at it, we don't penalize a company ever if they're doing better. It's just we use the revenue, simply determine if they qualify for an economic obsolescence reduction, but it's never an increase.
And to be clear, based upon the information that was provided to you, you determined that they were not entitled to an economic obsolescence reduction for 2023, correct?
Correct, because they had an increase comparing 21 versus 22.
Okay, Mr. Friedlander, is there anything else you would like to add, or any further information you would like to provide to the commission?
No, I think we followed the guidelines. We're very consistent in how we've done this through the years, and because the equipment went offshore, that's why we used an 8-year useful life when we feel we could have defended our position to use 10. So again, we feel the equipment was fairly valued. We took everything into consideration, but felt our numbers were solid.
Thank you, Mr. Friedlander. Please answer any additional questions the commissioners might have.
Okay. Any questions from the commission? And do we want to take this under advisement, or do we want to make a motion today? Either way.
I have a question.
Ask questions?
Sure.
Okay. If you don't mind, I just have a few questions. Mr. Freelander, who was the one that worked these properties. Mr. Freelander, you said for all shore-based generators, you do use 10-year. For all ones that you see in the Gulf of Mexico, you use 8-year for everyone across the county. Is that, or across the parish? Is that correct?
No, what I said was, if there's rental equipment, so you could have float collars, float shoes, cement baskets, anything that goes over the GOM, you're focusing on the generator word.
Yeah.
That's misleading.
So
Well,
any rental
rental
equipment.
equipment.
Okay, I apologize. So
Yeah.
any rental equipment that goes in the GOM. Did any other companies provide information to you regarding rental equipment that cannot be utilized?
They report all their stuff that's active. The ones that have idle equipment, they don't go into that specificity.
So no one else has gone into the specificity of what rental equipment they have that cannot be used
No, because it's based on situs.
because it's based on situs.
Yeah,
Okay.
that's per the tax commission's guidelines.
Okay. My next question goes into what you were saying regarding the revenue. So you said when there's a revenue increase, you guys don't hold that against a taxpayer. You only look at whether there's a decrease in revenue to determine whether there's an economic obsolescence adjustment. Is that correct?
Yes, we don't request that. It's
Okay.
usually a tax rep that says, hey, it looks like my client went down. Most of the time, the obsolescence reduction, they don't even qualify for. So that's not something we ever required to begin with. We focus on the equipment that had Citus and Lafouche. It's usually tax reps that will ask what can be provided to have a consideration for economic obsolescence.
Okay. Well, my follow-up question to that is, do you know what the expenses were? Do you know what the net profit was?
For Assessor Thibodeau, we go by gross revenue. That is an internal policy that Assessor Thibodeau created.
But without knowing expenses, how can you know if the company actually made money?
Because a lot of times you can hide stuff between the lines, and we feel gross revenue is the best indication as to the health. But if you want to ask her that, I'll gladly switch seats with her.
Oh, no, please. I would love to hear the answer. I'm just curious.
They swore you in, Wendy?
Yes, they
Okay. With the transition, Assessor Thibodeau, could you please identify yourself for the record?
Wendy Thibodeau, Lafourche Parish Assessor. I use gross revenue because it's been my experience over the past 27 years dealing with tax reps that they hide expenses or they will exaggerate the cost or expenses that they have. I feel that it's more fair to every business, whether it's a large company like you or a mom and pop business, to do gross revenue. And I do the immediate year before, not 10 years. It's the exact same thing to be uniform and consistent throughout all of my taxpayers in Lafourche Parish to use gross revenue from the immediate prior year. If you would have rendered a
Mhm.
reduction in your gross revenue, you would have been awarded additional economic obsolescence.
Okay.
But
So,
because that's why we asked
Mhm.
for a whole year, we asked for the revenue specifically for that location.
okay.
Because it's not fair if we take in all of your gross revenue for
I
all of your locations. It's specific. The equipment is in LaRose.
Mhm.
I wanted the LaRose location.
Yes,
And that's why. It's
appreciate
to be
that.
uniform and consistent. And if you would have had another location and you had generators there, I would have asked for the gross revenue at that specific location. It's better to keep it all compartmentalized and not bunch it all up into under one corporate.
I completely agree with that, and I do appreciate you, Assessor Thibodeau, specifying that you want it separate per location, because that is where they have Citus. But I do want to go back to the point that you made on revenue and hiding information. So you are under the assumption that publicly traded companies that have to answer to their shareholders and the SEC would potentially hide information in their 10Ks that they're required to report that could change what these numbers should be as far as net profits?
Are you asking me if I know that they have in the past?
No.
Yes, I have seen it in my past experience. That's why I decided as the assessor at my discretion to
Mhm.
go by gross revenue, because I felt like that was the best policy to put in place for my taxpayers.
Okay, I appreciate that. Thank you.
Other questions from the commission?
Assessor Thibodeau, is there anything else you would like
Any
to add?
question?
I have a question. So
Sure.
I guess to either one, as far as fair market value goes, Ryan mentioned fair market value. So I guess my question is just on a very small, simple example. We're trying to find the fair market value for every particular asset. So how can we look at a generator that cannot be used and determine its fair market value is the same as a generator that can be used?
So are you asking me on your active generators for me to go back and reassess them at differently than what your other generators are? It's called uniform and consistent. That is what the tax commission requires us to do. And whether it's active or not active, that's not part of this. You had property in Lafourche Parish.
Mhm.
The whole basis of ad valorem taxation is to fund governmental services. If your generator catches on fire, my fire department is going to come put it out, whether it's active or not.
Mhm.
Therefore, it gets assessed and valued exactly the same.
So I guess for fair market value,
Fair market
Uh,
value.
my
But
question.
you're not really even at fair market value. You're actually less than what you're supposed to be because we use an 8-year life instead of a 10,
We're at the fair market value as every other rental equipment that goes offshore in Lafourche.
not by generators. We could have
Rental
used the
equipment,
generators.
Yes. Yeah, like I said.
But I do that to be fair because I believe at the discretion of as the assessor, I believe that because it goes offshore and saltwater intrusion and all of the other things that y'all have to come on, I think it is fair as the assessor
Mhm.
that we use an 8-year life for anything that goes
And
in.
I agree, and I
across there.
appreciate that.
Yeah.
I just, like I said, it's a hard concept to grasp as far as fair market value goes. If you were to go to sell this generator and go to sell this generator, one runs, one doesn't. How are they the same? As far as value goes.
It's according to the Louisiana Tax Commission tables. We use that. And I think the fair market value is what they say. That's what they say it is. If it didn't work, if your generators don't work and they're not worth anything, then get rid of them. Why won't you get rid of them? Then I won't tax you at all. We wouldn't be here. It has market value. And what it is that it's more of an average on all of your generators instead of piecemealing and a line item value and market value on every single one of your generators. Your active ones are getting assessed the same as your inactive ones. So if you, I mean, are you trying to say that I should go and every single generator go market value?
I would say, yes, you would try to determine that fair market value per asset.
That's why we provide that detail.
But the tax commission guidelines say whatever situs is January 1st in the property in Lafourche Parish, it goes off of these tables, and that's what we did. If you want to go line item by line item, then it's not mass appraisal. It's not, it goes against everything that the tax commission does all year long in their tables. So what you're suggesting is that every single piece of rental equipment, it needs to be, you rendered that value to us. You did, not me. You rendered that value to us. We take it and follow the tax commission's guidelines and come up with a market value.
And what is that definition of market value?
The definition of market value?
Correct. What is that definition of market value per the Louisiana guidelines?
You want me to read it to you? Really?
Well, I have it.
I know, we're going around in circles.
No.
Okay.
Okay. It kind of goes.
Oh, the depth.
Yes. Correct. I am. That,
Just don't have it right.
okay. So I guess my question then is, since the definition of market value says what a willing buyer and willing seller would pay for a specific
In an open market.
item in an open market, are you suggesting that a willing buyer, willing seller would pay the same on average for these pieces of equipment?
What? This. That's what chapter 25 explains, right here. Is this his or ours?
Yeah.
It's ours. I'm not quite clear on what you're trying to get at.
And I apologize if it came off wrong. What I was trying to get at is, since the definition says, again, willing buyer, willing seller, all information being known, open market, and you're saying across the board, the average is a fair market value. You're saying that someone would pay the same for something not working on average as they would working. Because the definition under chapter 25 does say you use the tables, correct, but then it also says under the discretion, you have the ability to look at modernization, you have the ability to look at facelifting.
And I feel like I have.
Okay, and that's what I was trying to get at, and I apologize if it came off wrong.
Okay.
Okay. Any other questions from the commission? Hearing none, do I hear a motion?
Mr. Chair, I'd like to make a motion to uphold the assessor's value of $21,439,400.
We have a motion on the table. Is there any discussion on the motion? Is there any objection to the motion? Hearing none, motion is adopted. Is there any other matters to appear before the tax commission? Hearing none, do I hear a motion to adjourn? We have a motion. Is there any discussion on the motion? Any objection? Hearing none, we are